Hello, Lagos. Good afternoon. This is Broad Street Drive on 99.3 Nigeria Info. I am Hilary Noruka, and for the next 25 minutes, we'll try to make sense of big business issues that affect us all here in Nigeria and across Africa. So, we'll take a look at the stock market last week and we'll head into the big issue of the day.
Stock Watch.
So Lagos, investors on the Nigerian Stock Exchange lost 1.26 trillion naira in market value last week as the market reversed some of the gains recorded a week earlier. Market capitalization fell by 0.8% to 158.3 trillion naira, while the NGS All Share Index shed 0.84% to close at 245,283.68 points. But trading activity was stronger. Investors exchanged 5 billion shares worth 404.76 billion naira in more than 285,000 deals, with the financial services sector dominating activity and accounting for more than 3/4 of the total trading volume. First Holdco, Ava Capital, and Access Holdings were the three most actively traded stocks by volume. As you may well know, in the week under review, trillionaire investor Femi Otedola tightened his hold on First Holdco, acquiring an additional 1.78 billion shares of the financial group worth roughly 222 billion naira. He now controls 26% of First Holdco, and on the other hand, Ava Capital PLC was welcomed to the NGX, becoming a new listing with a new listing of 5 billion ordinary shares of 1 naira each at 7 naira 50 kobo per share. So Lagos, that's just a wrap up of what happened on the NGX last week. Trading is on the exchange and will be over at 4 p.m. today.
The big issues.
Now, heading into the big issue of today, time now to turn our attention to the main discussion for today. So, for decades, doing business across Africa has often meant dealing with the money problem. Let's say I'm a flower shop owner here in Lagos, looking to buy flowers from Kenya. How do I pay? What currency do I pay in? And what channel do I use? Now, a business in Nigeria that wants to buy from a supplier in Ghana may have to convert naira into dollars, then into the Ghanaian cedis before buying. That means more costs, more delays, and sometimes more complications. But what if African businesses could trade with each other using their own local currencies? So I'm able to buy something from my Ghanaian supplier, I pay naira, and my Ghanaian supplier receives the money in cedis. Now, that is the idea behind the Pan-African Payment and Settlement System, or PAPS, PAPSS. It's a platform designed to make cross-border payments across Africa faster and easier, without always needing to use a third currency, such as the US dollar. Now, today on Broad Street Drive, we're talking PAPS, the proposed common West African currency, that's the ECHO, and the future of Pan-African payments. My guest is Professor Ken Ife. He's a development economist and the president of the Institute of Professional Economists and Policy Management. He's also a member of the Governing Council of the Ministry of Finance Incorporated and is a consultant to ECOWAS and the Central Bank of Nigeria. Glad to have you here, Professor Ken.
Thank you for having me.
So let's start this way. For someone who is hearing about PAPS for the first time, can you take us through what it is?
Well, PAPS is a continental payment highway infrastructure that allows anybody in the continent to use their local currency to settle in the local currency of the country that they want to import or export to. So in effect, it is displacing dollar as the means of doing that same transaction, because up until now, you would have to purchase dollar and then use dollar to settle. You have to bear currency risks. And then on the other end, the same. So you end up losing about 20% as transaction cost on both sides. So that is the major thing that it seeks to do. But there are other things in the we have, ECOWAS has its own ECOWAS payment and settlement system, which is a subset of our ECOWAS currency. We are heading to a single currency by 2027. So they are complementary. All three are complementary in the role that they play, but they support each other. But they are in different pecking order in the whole financial architecture. There are different levels in the financial architecture.
So can you break it down simply? So if I want to, like I give an example, I want to buy flowers from Kenya, I want to bring them to Nigeria. How would this work practically?
Well, they raise invoice for you. You go to your bank. Your local bank is supported by central bank. All our commercial banks are online now. They're doing this transaction. And so you approach them that you have goods that you want to import, and the value of those goods are 2 million shillings. And then the equivalent, they'll tell you the equivalent of it in Nigerian naira. You pay in Nigerian naira, and they settle them out there in shillings. So it's just as simple as that. You are not going to apply to go and buy dollars, and then they will quote for you in dollar, and then you will pay in dollar, and then they will go and change it in dollar as well to their city, and then you lose money on both sides. You lose all that. There's so much transaction cost. And by the way, too, you may also end up using letter of credit too, which it creates another layer. So it's just as simple as that, actually. It's like using your business card, any of these your cards, to order goods and then pay. And if you look at our banks now, if you look at when you make a transaction, you will see message that comes with each transaction saying to you, you can now use this our bank, use your card or this your app to settle anything in Africa or in the world. So you can now see the confidence with which our banks are now telling you, using your mobile phone, your mobile app to settle. Obviously, it will have to go through a gateway. So, but that's what we are seeing on the front. But for major transactions, you'll have to go to your bank, and then they'll sort it out for you.
So let's find out, how fast is this?
I mean, it doesn't take that long. You're talking about within a day. If you use the one of China, it's in seconds, honestly. So that is what it's meant to achieve. It doesn't take that long, and it doesn't have all those paperwork that you would expect, those long-winded paperwork. But it's all going to get easier progressively, because there are other things coming in. Like ECOWAS now has a module that will talk to if you want to do the transaction only in ECOWAS region. But you can use both. You have two options now. If you can use the ECOWAS one, and then you can use the Pan-African one. But they're all working together seamlessly.
Okay, so obviously when I go to my bank app, on my bank app I can see PAPs on my bank app. Right, that's one of the options, to be able to pay to someone who is in another country here on the continent. But I want to find out how many countries are signed onto this, and how did this come about? Can you take us through the journey? Who first initiated this? Who is the administrator? How do the central banks come in here?
Yeah, originally it was us in ECOWAS that started this. So we started this in the context of our single monetary union and our single currency, and we are developing our gateway and our ECOWAS payment and settlement system. When they suddenly launched AfTAC, that is Africa Continental Free Trade. So, and part of the arrangement of launching it was that Afrexim Bank now undertook that they are going to do the Pan-African payment and settlement system. So they came to ECOWAS and collected everything we have, and then they fully developed the program. Now they developed the system to serve the whole of Africa. And now, obviously, for you to do international transactions, central bank needs to be involved. So all the central banks got involved to make sure that they can authorize the commercial banks to be able to do those transactions as well. So they did. And so you can see that when Cardoso speaks, he is encouraging these commercial banks, please get in on this. that this is going to make things easier. It will facilitate trade. So the central banks are involved. So at the end of the day, if you are even using any bank to pay, don't forget, or commercial bank, or merchant bank, or development bank, or microfinance banks, they all have the authority of the central bank to deal on this, and they're all accountable, and they're all subject to monitoring our risk-based supervision and our central bank monthly supervision that we do. We also do those alongside the NDIC, So that is just as simple as that. That the whole players in the entire value chain, payment value chain, have logged in. So it's now seamless. The transaction is seamless.
Do you see any challenges to this? Maybe,
and it's also happening on the other side too.
When you say the other side, what do you mean?
No, the people you are buying from or the people you are supplying to. So those countries are all also lined up. Most countries now in Africa have joined. Most of them, not all of them, but most of them are seeing the benefits and are joining. Who doesn't want to get smooth and easy payment? And I want you to understand that it is about commerce. It's not about everything. Because when we discuss this in relation to what is going on in ECOWAS, then you have to look at what is the primary goal of the ECOWAS currency and then the PAPs. What is the nature of it? What is the scope of it? What is the current status of them? And then, of course, what is the mechanism used by both of them to operate? So we will need to, when we start comparing them, you will see the difference between those two mechanisms, and then the correspondence between ECOWAS' own version of the EPSS and the continental version. So the continental one, perhaps, is like a digital bridge between what we are doing in ECOWAS and the entire continent. But it is still about commerce. It's still about e-commerce, paying for goods. It's still about commerce. Because you cannot expect, if South Africa wants to invest $10 billion in Nigeria, you are telling me that it's going to go through PAPs. No, you are going to be talking to a different thing. You are going to be talking to our single currency, because that is where you play sovereign. That one is a sovereign arrangement, sovereign currency, and forex transactions, reserve management, and all of that. That's far higher in the pecking order. So that is where big monies are going to be going through, or going to, not on commercial transactions, if you know what I mean. There are different scope.
So talk to us more about that, about the big money transactions, especially with ECOWAS saying that ECO will become a currency by the first quarter of 2027. Now, how does that complement PAPs? How will everything work? West Africa having its own currency.
First of all, the objective or the primary goal for ECOWAS is to achieve a full monetary union. And that monetary integration is epitomized by a single currency. No, don't forget that we have done many things. We've done free trade area many years ago, over 20 years. Africa is only doing free trade area now, which is Africa Continental Free Trade. Yeah. We have moved beyond that to do customs union, and we have a single ECOWAS common external tariff. We've also moved beyond that to do investment protocols that harmonizes investment codes and all of that to achieve economic market integration. Then we are now in the final stage, which is the full economic integration, which is epitomized by single currency. So when you are going to go into single currency, you are expected to abandon all your currencies, abandon Naira, cedis, franc, and move into, just like Europe that abandoned all their currencies, 28 currencies, and moved into a single euro. Now, but there are conditions that you have to meet. There are two sets of conditions. One is primary condition. The primary condition, they're called macroeconomic convergence criteria. Now, the first one is that you must have a single-digit inflation. Second one is that you also have to have the debt to GDP ratio has to be reasonable and not to exceed 70%. Then you have a third one about also these are four. Those are the four major ones. And then you have six secondary ones that are not critical. Initially, you have to enter when you meet these first four, and then you can now enter. But then, and then that's it. So but then it's like Europe. Once you enter, you now have to operate between plus minus. For example, the exchange rate, when you must enter into with a stable exchange rate, and when you enter, you must stay between plus minus 15% of the exchange rate. You cannot just go too high, go too far, because you need to have stability for confidence and all of that. And whatever you are doing in your country will have repercussions for the other countries. So you have to operate within those range. So those are some of the conditions. And then you also try not to, the central banks are not allowed to give more than 10% loan to federal government. Because if you give them, they must repay it within that financial year. It shouldn't be more than 10%. You can imagine what happened in Nigeria when our budget is like, it was about 30 trillion. So we shouldn't be giving more than 3 trillion to government as loan, and then they should repay it. But instead, you saw 27 trillion was given. Can you imagine? More than 10 times more than what you are limited to do. And then it increased from 27 to 33. And you can see that it created massive inflation. You don't see what kind of inflation we're having. That is part of the challenge that we had. And imagine if other countries, you were in the union with other countries in their currency, you would destroy these other economies, because you have now been forced to devalue your currency, from 500 naira to $1 to 1,500 naira to $1, 300% devaluation. Now that will affect the other countries that are in the game, because you are now going to be making your products much more cheaper than theirs, and then forcing goods through diversion into your economy. So they won't like that. You understand? So all of you need to operate within a band to maintain some stability, and then also some consistency and fairness and avoid trade diversion and all kinds of that's why the borrowing has to be within a limit, because it is the borrowing that forces you to also devalue if you are not meeting up with your payment. And once you have all these issues, they're all part of the things that the deficit too. Trade deficit, not trade deficit. Your budget deficit must not be 100% of GDP. Can you imagine if all of them if you have a huge deficit of 20% when it should be 3%, then it means that you are running up debt, and at whose expense? It will affect your currency. It will affect all kinds of indicators, and then it will force other members to come and bail you out before you. The nation can get bankrupt because of your debt. So you are now putting pressure on all the other members. So these are some of the issues there. But in terms of scope, the Pan-African PAPS is Africa-wide, whereas ECO is for West Africa. EPSS, ECOWAS Payment SMS is for West Africa. So, but this other one gives them a digital bridge to go from West Africa to the whole continent.
So let's stay in ECOWAS right now. You just listed 4 criteria, the primary criteria that countries need to meet for ECO to become a reality. Do you see all ECOWAS countries meeting this criteria before January 2027?
No, it's not
so
all.
First of all, you talked about...
In fact, 15 years ago,
yes,
I was traveling on a plane, I think from London, with Chambers. Ibn Chambers was the president of ECOWAS 15 years ago. And I told him that our experience in Europe is that if 4 countries are ready, let them start. Others will join later. I told him we shouldn't be delaying. Don't keep postponing it, because it's difficult. At that time, only Togo has met all the conditions, macroeconomic convergence conditions. And then you have to maintain them within 3 years. So I told him that you can't wait forever. So he said anyway that they will discuss it, and they never did. And now is now a major condition now that fewer countries, whoever is ready will start, and then they've done it that you do meet the first 4, the other 6 you will meet in due course. So they've reduced it. It was too stringent. So now it was used to be 40% debt to GDP ratio, it's now 70. So now They can, some of them can go, but Nigeria can't really enter because we still have inflation.
Yeah,
That is
inflation is still double
50%.
digits. So, because I was going to ask a direct question.
That's right. But the other ones, Nigeria is okay on the other ones. One of them is that your reserve, your foreign reserve, must have not less than 3 months import cover. Nigeria is 10 months. So we're doing 3 times more than all the other countries. So, and our debt to GDP ratio is crashed. It's now about 30-something%. It used to be a lot higher. So we are doing quite well. There is just that inflation that needs to come within single digits so that you don't jeopardize all the other countries. Because if you look at the Francophone countries, they are under 1%, 2%, their inflation. Very, very low. Because, France is managing their currency for them, and they are pegged to euro. So they cannot run extremely high inflation when they are pegged to euro. Euro is a low inflation zone of about 2% maximum. So you can see that discipline is there. But of course, France controls 80% of their foreign reserves and gives them only 20%. If they want to borrow, they'll come and borrow their own money in commercial rates. So you can see the discipline involved in that.
So I want to ask 2 questions. When ECHO comes, we start using ECHO, what will happen to the Naira?
No, you expected to drop the Naira. That's what we expected to do. I'm not sure how we are going to deal with. We may do the parity like UK. UK joined, but they refused to drop the pounds. So they gave exemption to UK, but all other countries had to drop their currency. Do you understand? So UK was one leg in, one leg out. We are still using our pounds, and then the rest of the 28, 27, we are using their euro. Well, we are using euro. Even Germany and France, they were all using euro. Do you understand? So I don't know whether that an exemption can be granted to Nigeria, being the fact that Nigeria is over 60% of ECOWAS inside of the economy. And, because they can grant Nigeria an exception, give them 3 years, join the euro, but give them 3 years within which to come down. And in fact, I've been talking to our ministers, our planning ministers, and I'm saying to the minister, we need to make sure that being the people leading this whole thing, that in 2030, in our projection, macroeconomic projection, we should project single-digit inflation, rather than telling me that inflation is projected at 11, 12%. I don't want to hear that. I say you should put 10% or 9%, so that people can see us serious, that within by 2030, we will be heading down to that. All other macroeconomic issues for us are fairly okay. But if you go to the other side, the other 6, there are some too that are problematic. Like they say that your investment, your revenue, there's revenue to the debt to revenue ratio, and then you have the investment to revenue. To at least 20% of your investment must go to capital expenditure, so that you can create jobs and not civil servants consume the whole money. Then there's also salaries. Wage bill must not be more than 35%. Yeah, so that you can have money to pay your debt and then put as investment. So all of those are conditions, all of them part of the macroeconomic conditions to make sure that there is convergence, serious macroeconomic convergence, fiscal convergence, and monetary convergence in the whole member states.
So my final question to you, since we run out of time, if you can try and answer this in 1 minute or so, is this a threat to the US dollar? How do you think the United States will?
It is designed to avoid US dollar. Before you finish your question, it's designed to avoid US dollar. I'm telling you, there's no mistake about it, because the dollar is a problem to everybody. Look at all the war going on in Arab. Why is it so? Because in 1984, I remember when I was finishing my school SAT, also OPEC was threatened by Henry Kissinger. They wanted to go to war over OPEC, but then they decided to have the petrodollar, which means, okay, you guys can now sell the gas and crude in dollar, but bring the excess money into America to buy bills and other stuff, and then we'll provide you security. That's the arrangement today. And that is the whole thing. Now people are saying that the whole arrangement is not working. And then even Saudi Arabia is now buying crude, selling crude to China in yuan. So that is the bottom of this whole thing. And so what is happening is that the whole global economy has been skewed into all these, whoever makes money lends that money by default to America. So America owes, even though their GDP is 26 trillion, they owe over 39 trillion. And they will never pay their debt because they will only print more dollars. So the world is tired of it. That arrangement they're not happy. So nobody's happy with those. That's why you have the multipolar arrangement moving away. You have BRICS.
Yeah, thank you, sir. I wish you had more time, but we've run out of time. I've been speaking with Professor Ken Ife. He's a development economist and the president of the Institute of Professional Economists and Policy Management. He's also a member of the Governing Council of the Ministry of Finance Incorporated and a consultant to ECOWAS and the Central Bank of Nigeria. We've been talking the ECO, PAPS, and the future of Pan-African payments. Thank you so much for joining me on Broad Street Drive today.
Thank you.
99.3 Nigeria Info. We are more than just radio. Subscribe to our YouTube channel at Nigeria Info FM. Check us out on Facebook at Nigeria Info 99.3. Follow us on Twitter at Nigeria Info FM and on Instagram at Nigeria Info FM Lagos for live updates as it happens. 99.3 Nigeria Info. Let's talk.